Hey everyone, and thank you for joining me on week 2. And in this week's session, we're going to be covering negotiation and building your power team. We've got a ton of information to cover, and this week's going to be a lot more interesting than the previous week where we covered the fundamentals. Now, just as a note, make sure you guys have actually completed week 1 in its entirety and you understand it completely, as well as completing the actionable tasks that I've set out on week 1 as well. If those things aren't done and you don't understand week 1 completely, please pause this video and go back and complete week 1 to the point that you really understand everything like second nature before you come into week 2. The reason why I say that is because week 2 won't make too much sense if you don't have all the knowledge from week 1. And this is how it's going to be for the remainder of the course as well. You're going to have to learn 1 week at a time before you move on to the following week. Otherwise, it gets more confusing and it just won't make sense to you guys. Okay, so let's just jump straight into it, guys. So as you remember from week 1, every single week is going to have the learning outcome displayed in the beginning of the week session. So in week 2 session, when we're going over negotiation and building your power team, this is the learning outcome that you're expected to be able to implement and apply once you finish this week's session. And that is, for this week, you'll actually be able to build the ideal power team and have the key players to make your operation a success. And what I mean by operation is, I mean your property trading business a success. You'll also be able to leverage the skills and time of industry professionals. You'll also be able to understand the fundamentals of sales and importance of efficient communication. And lastly, you'll actually be able to use the proven negotiation techniques I'm going to be going over on this week's session to negotiate for the best deal. And when I say best deal, I don't mean just the best property purchase price or anything like that. I mean in every situation where it's transactional, and any situation where there's some form of give and take, I want you guys to apply these techniques so that you get the best outcome for yourself. Okay, so that's the learning outcomes that you're expected to be able to achieve, and once I go over this week's session, you'll be able to do all these things listed on the learning outcomes. The first unit we'll be talking about in Unit 1 is building your power team and finding the right members to be a part of your power team. So the first thing we'll be going over, guys, in this week's session is building your power team. And you can see the 2 bullet points here. The first being your success has a direct correlation of the network you have. The second being having the right team will be the difference of keeping thousands in your pocket. And both are very true, and you guys will remember the statement, we've all heard it before, and it's not what you know, it's who you know. And that actually has a big part in the business that we're in property trading, because you need to leverage the skills of other people for the success of your business. There's no way that one person can do it all. You don't know all the statistics in the area of all the recent sales. You don't know what's been happening in the area. You don't know whether prices have moved up or moved down. And you need to leverage your network, and that will actually depend on how successful you are. And when I actually look back now to when I actually first started, and I didn't actually have the right people on board, including tradies and other real estate agents that were out for themselves, I realized that if I actually had spent more time creating the right team from the very beginning that understood what I did, then I would be able to actually save a lot more money into my own pocket rather than giving it to other people. It's all these different things that I look back on now and go, I was so silly. I didn't negotiate commission rates. I didn't negotiate certain pricings for trade jobs and stuff like that. When I look at it now and I realize the price difference I've been able to gain today versus what I was doing, 4 years back, I would have saved an extra 100 to 200,000. And that's much better off in my own pocket than giving it to these industry professionals. So you want to be working with the right people that understand what you do. And when they understand that, their interest is going to tie in with your interest, and you're going to work in almost a coalition together to ensure the best results for everyone. So who exactly is going to be on your power team? And we've actually segmented it into 2 different sections. You've got your main power team, and then you've got your additional members as well. So firstly, let's walk through the main power team. So who you're going to have in your main power team is a banker or mortgage broker. You're going to have an accountant or accountants. You're going to have lawyers, sometimes more than one. You're going to have several different real estate agents. You're going to have different tradespeople, and you're going to have property valuers as well. You're also going to have meth testers and other people involved in that space also. Now, for the additional members, the reason why I've put them as additional members is because I'll actually be explaining this in more detail in week 4 when we cover structuring the deal. But the additional members that are going to be a part of your power team are also going to be your joint venture money partners, the people that you're going to do deals together with if you don't have funds to start with. It's also going to be your buyers, a database of buyers that will buy the stock that you pick up. And you're also going to have a network of sellers as well. People that know what you do and will reach out to you when they're ready to sell. But let's just leave that for the side, to the side for a minute, and let's cover that in week 4 where we go over structuring the deals, because even with your main power team, there's so much we have to cover to ensure you get everything in place correctly. So the first player that we're going to be talking about part of your power team is your banker or mortgage broker. And I've actually created a little chart down below that you can see on the screen that's got the major differences between the both. So firstly, the banker normally gets rates from one bank, and depending on which bank they work in is obviously the bank they're getting the rates from. Versus a mortgage broker, they don't particularly work for any bank. Instead, they can actually gain rates and compare different rates from multiple different banks. Now, the banker will work for the bank's best interests. Their interest lies with the banks. They want to ensure the banks are making the most money. They want to hit the performance targets for the bank as well. Versus a mortgage broker has their interest, they work in your best interest. They want to ensure that you get the loan and get the mortgage, and that's how they're going to get paid, which we'll talk about in a second. Now, with the banker, normally there's more work involved because you're actually applying directly with the bank. However, with a mortgage broker, there's less work involved because they actually do all the paperwork. That's how they get paid. That's why they get paid. And also, often the mortgage broker will be able to paint a picture to the different banks that they're approaching to get you the best deal. Versus a banker might not be able to actually encourage you to tell your story in a certain way, and you might get your loan denied. So mortgage brokers are a little bit more flexible, and they can create a more compelling story to ensure that you get the loan for the property that you're trying to buy. Next we have you can actually get a better rate if you've got good relationships with your banker. Versus a mortgage broker, they normally find tailored solutions for your situation. And of course, if your mortgage broker particularly likes using one specific bank and you've done business with that bank and that mortgage broker before, you're also going to be able to get a better rate because you've built that relationship over time as well. So both banker and mortgage brokers, you can build a relationship and get better rates or get better offers over time as well. That applies for both. Lastly, the banker doesn't actually get commission on every loan. I mean, it may be case on case depending on which bank, so I can't confirm the accuracy of that statement. However, I do realize that most bankers get paid via a salary, and they may also get paid via commission bonuses, possibly on a monthly basis or a quarterly basis. That I'm not too sure of. What I do know is that the mortgage broker actually charges commission to the bank, and you don't have to actually pay their commission after they've done all that work for you. They actually bill the bank, and the bank will actually pay them a commission for essentially helping the bank find a new client, a new customer, which is yourself getting the loan. And it's basically a fee to thank the mortgage broker, to say thank you for finding us a client, and I hope you continue to find more clients, and we'll continue to pay you commission. Now, this commission range, I've been told, can range anywhere from kind of $2,000 upwards to $5,000 or more, depending on depending on the amount of the loan. Again, I'm not a mortgage broker, so this is something you might want to clarify with a mortgage broker. But the purpose of this slide here is to really break down the differences and figure out who's going to be working in your best interest and who to add to your team. Now, you can see, that I've mentioned that commission is normally charged to the bank, and that is often the case when you're going through a major bank. However, a mortgage broker, if under circumstances where you're unable to get a loan from the major banks, the mortgage broker may actually have a network of people that he's built up over time of private lenders, or what we call second tier lenders, or private banks that also do lending for property and other business ventures as well. Now, in certain cases of this, the mortgage broker might actually charge you as an establishment fee because the private lenders or the bank may not actually be paying the mortgage broker, in which case you want to review all the paperwork to ensure that you make sense of all of this, and you don't get caught out by thinking that you don't have to pay a commission or establishment fee because you're thinking it's still a major bank, and in which case, if it's not, that commission charge that you're paying to the mortgage broker for helping you set everything up, also known as an establishment fee, can range from a percentage of the actual loan. So that could be 1%, it could be 1.5%, it could be 2%. It's just whatever they feel comfortable, what you can actually negotiate down to as well. More often than not, that establishment fee ranges from anywhere from $2,000 all the way upwards to $5,000 plus, again depending on the size of the loan. Also, I want to note, if your mortgage broker is actually helping you getting the loan through a major bank, there's normally a period of time that you're supposed to keep the loan for, because that's how the banks are actually making money, by you paying interest payments. Now, if you actually sell the property through and you've actually got the loan through a major bank, the mortgage broker may actually get his commission clawed back because the loan wasn't long enough, or they expected you to hold the loan for a period of 2 years, but you've only had it for 6 months or 3 months or whatever before that 2-year period, and you've actually decided to sell the property. Well, guess what? Your mortgage broker isn't going to get paid. He did get paid initially, and if he's actually spent the money, bad luck, guess what? He's going to actually have to pay that money back. So that's just something you want to be aware of, because if you're building a relationship with your mortgage broker, you don't want the case of them losing money on you actually selling the property, and the loan actually gets given back to the bank, and then your mortgage broker is the only person that loses out, because he's gone out and done all the paperwork for you and spent time on your application and so forth, and also helped create this compelling story, only for his commission to get called back. So you can understand that the relationship won't be off to a good start if he finds out that you've actually sold the property and that was your true intention, when you've always told him that, no, I'm not going to sell it, I'm going to keep it, and your commission is safe. So please keep that in mind as well when you're building a power team. So the next person we're going to be talking about on your power team is accountants. And for me, I really feel that when starting out, your accountant really is your best friend. They help you out, figure out where all the numbers are, and they also help you set up your company structures correctly, and help you understand GST implications when buying and selling, which can be quite a confusing process. And when I started out, I knew that it took me a few times to actually go out and buy properties, and constant conversations with my accountants to really understand GST, because they don't really teach you this stuff in school, or they do, but they don't dig into it enough so that you can apply it in the real world. So that's why your accountant is going to be one of your best friends, because they're going to help you understand everything and understand all of this. And they'll also help forecast your finance for lending purposes. Should you run your own business, or should you be not employed and you're not getting paid a normal salary, there are times where an accountant can actually forecast your expected revenue or expected income, and actually use that for lending purposes from the banks as well. Now, during this process, when you are setting up company structures and so forth, there is fees involved, and there is money that you do need to spend, but it's better off setting up correctly rather than going ahead as a sole trader and not having any company set up, because you might have more risk associated by doing it that way. So a company in GST incorporation ranges from $350 to about $500, or if you decide to set up a trust, it usually costs a little bit more, but it's a lot better to actually pay that money and have everything done correctly, rather than being pinged on a bad deal and you being personally liable. So you definitely don't want to do that. And the other big benefit with accountants is that when you're actually going out and doing trading, you don't want to handle all the numbers by yourself. You want to focus what you're good at. And again, this business is very much a people business. It's how well you can understand and connect with people. So I understand my strengths is actually going out and speaking to the next vendor and trying to drum up another deal, rather than spending hours and hours where I don't really understand this and it's not super efficient for me to do it, kind of pulling together all my accounts and making it all neat and tidy. So I leave that to my accountant, and the yearly accounting fees, which actually include filing your GST return and completing your end of year tax return, and even accounting advice, will actually range from about $1,000 up to kind of $2,000. And that kind of depends on how many properties you have in your portfolio and how many employees you want to bring on board and whatnot. But just as a general rule of thumb, it should cost about $1,000 to about $2,000 as a yearly fee. So it's nothing too major, and they can actually do all of that for you. A lawyer or lawyers is a key component of your power team. And trust me when I say this, when you're doing property trading, In 1 year, you're going to be meeting your lawyer or lawyers more times than you've ever met a lawyer in your entire life. Now, there are actually different types of lawyers. There's a solicitor and a barrister, and we'll just go over the differences between the two. So a solicitor can help you out with conveyancing law, which is what we're wanting. Conveyancing law is where basically a lawyer helps transfers the title from one person or one entity to another. And a solicitor can also help with setting up wills and other kind of basic lawyer type stuff, whereas a barrister is more focused on going to the high court and defending legal hearings and so forth. So the difference between the two is that you want to figure out which one you actually need, which is the conveyancing lawyer or a solicitor that does conveyancing. We don't actually need a barrister unless we get into some issues when it comes to buying or selling a property, which is really the case. Now, the average fees for a conveyancing lawyer can actually range from $900 all the way up to $1,500 per transaction. And it can actually cost a total of kind of $1,800 to $3,000 when you're actually buying and selling together. So for each transaction, one way could cost $900 to $1,500, and on the other end, when you're actually selling, it's going to cost the same amount. So you're looking at a total cost of anywhere ranging from $1,800 to $3,000 when you're looking at both buying and selling a property. Now, there are some lawyers that will actually charge a single fee for an on-sale, which can range from $1,100 to $1,500, which will save you a ton of money when you're doing a lot of different deals. So keep that in mind when you're doing on-sales. Generally, your lawyer cost is going to be a lot more reduced as well. Now, barristers, however, 90% of the time or 95% of the time, there's actually no need for a barrister at all. And barristers aren't cheap either. They charge anywhere between $250 per hour all the way up to $1,000 per hour, depending on the case that they're actually working on. So those are the major differences, and what I recommend for you guys is, especially when you're starting off, you want to be looking for a conveyancing lawyer that's priced on the cheaper end for each transaction. And you know, although you can find a lawyer that can charge you $900 for one transaction, you can equally find conveyancing lawyers that are going to charge you $1,500 for the same transaction. So you're almost paying double. So that's the mistake that I came into when I first started doing property trading. I was actually using the wrong lawyer. Well, you know, I wasn't using a barrister, but the solicitor that I was using was essentially charging me $1,500 per transaction. It was only later on that I discovered, meeting other property traders and other people in the industry, that, you know, I could actually go out and find a conveyancing lawyer that would only charge me $900. So of course, if I'm going to be able to save almost half that cost, I'm going to go out and find a cheaper conveyancing lawyer, and I suggest you guys do the same. Next, we're going to be talking about real estate agents. Now, not just any real estate agents. What we're going to be talking about in this week's section is a buyer's agent. So I'm not going to be talking about a listing agent until we get up to the selling section of the Property Academy program. But in regards to when it comes to buying, you want to be looking for a buyer's agent. And what exactly is a buyer's agent? A buyer's agent essentially works for you by finding suitable deals that fit into your criteria that you've set out for them. And the benefit here is that the buyer's agent only actually gets paid if you actually buy the deal successfully. Now, if you don't actually buy the deal, unfortunately, the buyer's agent isn't actually going to get paid anything. And the buyer's agent, how it works is they generally work with the listing agent, but tries to get the best price for the buyer, which is yourself. However, the listing agent will still focus on trying to get the best price for the vendor. However, if they haven't been able to sell the property and this buyer's agent actually found me as a buyer and thinks this property is suitable for me, well, of course, they're going to work in my best interest to try to get that price lower so I can actually successfully buy it. Now, if I don't end up buying it, unfortunately, that listing agent's not going to get paid either, and neither is the buyer's agent. So when I first actually got started and I didn't have a lot of money for advertising to bring in new deals, what I actually had was I had a ton of buyer agents going out and looking for properties that I've already set the criteria for. And these agents are still working with me to this day, and they still send me properties very often, and I look over them to see if it's a deal that would work for me. Then I put out an offer. And you know, I actually had a buyer's agent. I had several buyer's agents sending me properties every single day. So I didn't have to lift a finger, but all these different leads or all these different properties would come into my email. And if I found one that I thought would suit my criteria, I'd call up my buyer's agent and say, let's get a viewing in and let's put in an offer. So that's what you guys should be looking for in your power team, is to find a buyer's agent that understands what you do. And they're not hard to find because all you have to do is introduce yourself to the real estate agent and let them know this is how you work as a business. And you know, very often they're keen to work with you because they'll know other listing agents that have struggled to sell a certain property. So it makes sense for that listing agent to work with a different agent, in this case your buyer's agent, just to try get the property sold. That means the vendor will finally get the money they need for the property, the listing agent gets paid, and the buyer agent also gets paid as well, because they'll be splitting the commission with the listing agent. And also, you know, the buyer on the other end, the happy buyer, which is myself, has ended up purchasing a property that I found through an agent recommendation. So that's what a buyer's agent is. So next on the list, part of our main power team is the right tradesmen, or the right tradies. And you know, this ranges from having builders, handymen, electricians, plumbers, roofers, tilers, carpenters, painters, kitchen specialists that put you know, set kitchens together for you, landscapers, home stagers. You know, all these trade people are very important, and it's important to actually have a good idea that you use good quality people as well as people that understand your business and know the time frames you're working in. And the great thing about having access to the internet is there's actually so many different online mediums you can use to go find these tradies. And I'm not going to go over all the mediums, so it's just a little bit of research on your own end where you can get a few different tradies out there and assess them individually and see you know, how cost effective are they, how quickly can they get the job done, you know, what experience do they have in the past, how long have they been a tradie, do they run a company or are they just an employee? You know, all these are different questions need to be answered to figure out which handyman is going to be part of your team, because keep in mind, this handyman or this builder or this electrician is going to be working with you ongoing for all the other deals that you're going to be picking up as well. And you know, it's vital to not just go for the cheapest price. I never think that being cheap is the best option, because you know, what you pay for is what you get. The better way to look at it is be frugal instead of cheap. There's a big difference in that. Being cheap is going after the cheapest product regardless of quality, whereas being frugal is paying a good price for something that is worth something, is worth good quality. And I'll just give you an example, because I actually had a friend that brought a first home to live in, and initially he got a very cheap tradie out there as a friend of a friend who said, yes, I'll do it for a cash price. And I think they paid, you know, $15,000 for a complete interior renovation for a 3-bedroom home, including building a deck and a pergola and stuff like that as well. So if you think about it, that's incredibly cheap, paying $15,000 for a complete package. And you know, when I tell you this home needed massive amounts of renovation. Well, guess what? The builder that had orchestrated everything for my friend, you know, missed so many things out and did so many shortcuts that it actually ended up costing more, because we had to get, well, my friend actually had to get new tradies out there to repair everything. And when the new tradies actually came out on site that were more expensive but were quality tradesmen, were pretty much shocked at the work that was done on the property, because they would never do that standard of work for any of their other clients. So, you know, they were really shocked that someone out there could be doing these jobs and still charging people and making money off it as well. Also, one big thing that my friend realized, you know, after living in the property for a good 6 months, was that the previous tradie, the previous builder managing the whole project, didn't actually waterproof the bathroom before laying down the vinyl or the tiles and putting in the shower. So can you imagine that? If there's no waterproofing done, you can imagine if there's the slightest crack in the shower or the bathroom, then it's actually going to seep into the floors, and without waterproofing, the whole structure of the floor and the framework around the bathroom would actually start to rot. So 6 months later, he actually started realizing that, you know, wait a second, why is the floor always so damp? Why is this room always so cold? And he realized that water was starting to seep in through the small cracks and going to the foundation underneath the bathroom floors. And at which point he pretty much had to redo his entire bathroom and spend an extra $5 to $8 grand getting all that sorted, because of the lack of experience or the shortcuts that initial tradie took. And that just shows you the difference between paying someone cheap versus paying someone for the actual quality and craftsmanship. So please keep that in mind. And also, when you are getting out tradies and you're building your power team, make sure you also keep your receipts for all expenses, because those are things you can actually claim back, and your accountant will actually help with that as well. So what I want to cover next is just a few rule of thumbs that I follow to ensure that I actually get good tradies or good people on my power team. And I encourage you guys to actually go out and use your online resources like Google. I really do think Google is your best friend when it comes to finding and building your power team. But there's also resources like the Yellow Pages, and even just when you're driving about, you'll also see a lot of signs for tradies looking for work. And I really appreciate businesses that advertise, because it means firstly they're making money, which means they can spend on advertising, and it also shows me their mindset. It shows that they want to grow their business, and that's someone I want to work with, because personally I want to grow my business, and that's the mindset I have. I don't want to work with businesses that aren't in the same mindset towards growth. And a big reason for that is because if you're on the trajectory towards growth, you're actually innovating and applying new strategies to make things more efficient, versus someone that's been in business for the last 10 years, but they haven't actually decided to grow or advertise, and they've been capped at earning $100,000 a year. Well, that shows me what's actually happened over the last 10 years. Have they actually applied anything different to their business? Any different techniques, any different strategies? Can they be more efficient? And the answer probably is yes, but this business owner hasn't decided to do any of that. And, that's why I'd rather work with someone that is growing, is established, but equally spending money on advertising as well. That really shows that they're working towards something. And basically my rule of thumb is very straightforward. It's basically comparing 3 professionals in each industry, and the question is how fast can you do it, what price are you going to charge me, and what quality and experience do you have. So those are the 3 questions, and it's always my rule of thumb to get 3 professionals out on site. And for the work that I'm providing them, I want to hear them. What's the speed you're going to guarantee? How fast can you actually do it? What's the price you're going to charge me? Is it going to cost me an arm and a leg? And also, what quality do you have? What actual experience do you have? Or are you just starting out? And, I've made a note there saying it's not always about price, and sometimes what you pay for is what you get. And on the previous slide where I went over the story about my friend, that's exactly the case. You might pay $15,000 in the very initial beginning, but if you're having to pay an extra $10,000 ongoing to repair all the works, well, that's no better off. You're better off, instead of paying $15,000 and adding an extra 10 with a total cost of $25,000, aren't you better off finding a tradesman that might charge you $20,000 from the very beginning, but you don't have to actually check on his work and ensure that everything was done to the correct standard, because it's already done to a high standard. And you also want to find people that really understand your business model. This business is a fast-paced business. You have to turn around properties quickly, and sometimes the longer you hold it, the more expensive it's going to cost you. So you want to turnover speed. You have to understand quality, and you also have to, and the people working on your team also have to understand price. So they have to fulfill all those 3 things. But keep in mind, it's not always about price. I don't mind paying a little bit more, but the experience and quality that is there, or I don't mind paying a little bit more, but the speed is a lot quicker than someone else, because that speed essentially means that I'll be saving money on the holding cost, and I'll be receiving my profits or realizing my profits a lot sooner, meaning I can move forward and do another deal.